Good morning, traders. This is Michael coming to you from Game Edge on Friday, June 27th with our pre-market prep session. As always here at Game Edge, we'll start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model, which is based on the tick index. And this is basically the quick takeaway is that is this buying versus selling of overall market participants. We'll draw your attention to our key indicator here, which is the white bolded line. That's our cumulative tick intraday, what we call CT. And you've seen its lower left to upper right, and we saw some consolidation as we discussed yesterday. And then for our bullish case, we wanted to see this bolded CT start turning back to the upside in a linear up type fashion, indicating that buyers were coming back into the market and again just maintaining control. Overall, new highs versus new lows breadth indicator at the top right. Obviously, new highs were completely outpacing new lows, indicating more stocks are being accumulated. And then our filtered cumulative tick, which is plus 1,000, minus 1,000, larger institutional orders and larger market participants. You see that that was above zero and moving to the upside, indicating that overall that institutional players were in the overall market and accumulating. And then our cumulative tick, obviously reaching 151,000 yesterday, so a significant move to the upside. And the cumulative tick, again, indicating that buyers are in control of the overall market and moving to the upside. And then our colored ribbon, which is our longer look back period, indicating that this is the trend, and obviously red above cyan, and both with positive slopes. So our mechanical portfolio continues to be turned on and entering positions. I posted an update of our P2P, which are P trans to PX mechanical portfolio last night on X. So make sure you check that post out. And we're creeping back up towards that 73% win rate, which has been our historical back testing, in which our forward testing, we're coming up on our 3-year anniversary of that mechanical portfolio going live with live trades and actual money being deployed. So again, nice win rates, and we've been closing a lot of trades this week for a good gain. So make sure you check that out. Moving on to the market trend model with our tags, this basically just shows you how we've transitioned from a bearish overall look in the bolded CT under all the moving averages and cutting into the colored ribbon to a neutral status, and then back upside to a bullish look in the overall market. And these include our tick tag combos, so you can pause your player and read those. We've done extensive back testing on these tag combos, and we also use these in a mechanical type fashion for our portfolios, as well as swing trading and intraday trading also. So again, pause this and take a look at it and check out our education. All these tag combos have commentary with screenshots and show historical looks of when this has occurred before, and then the overall change in the market from a bearish look back to a neutral and bullish look. Again, we do this systematically over and over as the market just continues the same sine waves in peaks and valleys, and this just provides us an overall look of the trend and allows us to be at least on the right side of the market, which is roughly 50% of the battle. Moving on to the SPXA, these are the institutional positioning. Obviously, you'll notice these are the monthly expiry, so they are larger market participants. Again, significant amount of out-of-the-money call speculation, call dominated above and below spot price, and really no out-of-the-money put speculation. So again, this will continue to be supported by institutions and move to the upside as long as we see this overall sentiment and structure be maintained. Again, discussing these new strikes being open out in the overall options complex and market speculation up to the upside there. We see 6,300 and then obviously 6,200 to the upside. So again, with institutional positioning, full bullish to the upside, and then a significant amount of in-the-money calls, which will be supportive to the downside. So you can pause your player and read this commentary. Moving on to the SPXP, this is our speedboats. These contracts turn over much more rapidly. Obviously, 0DT as well as weekly expiries. Again, call dominated above and below spot price. Draw your attention to the significant amount of GEX that is expiring today. So this, again, money has to be deployed somewhere. So where that gets deployed will be most likely how the market moves. Again, if this gets deployed as out of the money call speculation, then most likely the market will continue to the upside, and then we'll continue to watch this and see this within our overall options positioning and structure day over day. COTMC is up here at 6,200 if you're not familiar with that nomenclature here from GameEdge. Again, this is a proprietary level that we look at where out of the money calls become in the money, and there's a high propensity for monetization, which is mechanical closing of those contracts as those holders want to be paid for their risk. So again, this may be an area where we see some stalling and pullback. It looks like pre-market we're already seeing some profit taking heading into the open, so we'll continue to watch that. Any pullback is an opportunity to get involved in the overall market in a bull market and a bullish sentiment and structure via the options complex, as we've been discussing really for the past few weeks. We've been looking for pullbacks for entries and getting involved again to the upside. So transition's a good area that we discussed multiple times, and then obviously any pullback you should be looking again to get involved in the upside, unless we start seeing a significant change in sentiment and structure day over day via the expiries. Moving on, the SPX P-GEX ratio. Again, this is a put-call ratio where we add a time component, which is gamma. Critical understanding that the flawed put-call ratio does not have that time component. So that's why we add that component in. Again, moving to the upside, as we discussed, we reached that peak there, maximum GEX ratio, and we're discussing about the possible of GEX ratio pulling back and the spot price continuing to rise, and then we see some sort of divergence, and then this will play out one of two ways. Spot price will continue to move to the upside, and we'll see GEX ratio continue to move the upside, indicating again significant amount of out of the money call speculation coming into the overall structure, or we'll see the overall spot price continue to appreciate, and we'll see the GEX ratio continue to drop, which would mean that the out of the money call speculation is starting to wane, and that we would most likely see some sort of consolidation or slight pullback coming into the overall market. So again, we'll continue to monitor this day over day, but extreme bullishness to the upside. So the options are definitely saying that the price appreciation can continue. But again, when we start reaching these extremes, we don't necessarily look for a pullback, but we just start looking for areas that we might see some sort of stalling or divergence within the overall speculation versus spot price. Moving on to the SPXP delta balance. Again, this is just showing you the options positioning above and below spot price with expiries day over day. Again, maintaining above that zero line. So again, above zero is overall bullish, and that means out of the money call speculators are continuing to maintain control of the overall structure. And again, the delta balance at 1, and then we divide these into left-hand plane, right-hand plane, so above and below spot price. We do see this quick drop there, and then recovery back above zero. So again, just maintaining the overall call speculators within the overall complex, maintaining control. So what we would want to look for is if we start to see future expiries start to drop via the right-hand plane, that would be their out of the money call speculation. Once that starts to drop, then the chance of price appreciation, the probability of price appreciation again starts to wane and starts to drop. And then the left-hand plane, this is your in the money call speculators. Obviously, if this starts to drop, then we see the in the money calls below us closing, and then the possibility of out of the money puts opening, again, speculation to the downside. But we're not seeing that at the moment. So again, we'll just continue to monitor this day over day, and the trend will continue to the upside until we start to see a change in the option structure via the expiry or mechanically closing of contracts as market participants take profit. Moving on to the SPXP 0DT for today, we have a very narrow GEX and DEX transitions, unambiguous. Being above spot price is bullish. To the upside, you'll notice over here call dominated. We have a significant amount of OI for a Friday. So again, a lot of options contracts within the overall structure. Again, above transition will be bullish. Any pullback to the transition that is met with overall buying and intraday volume analysis, which we'll be watching if that is sloping to the upside, indicating that market participants are still out of the money call speculating. That's an opportunity to get involved. Even if we pull back down below transition, obviously we'd be slightly more cautious, but we have significant levels below us of in the money calls that will continue to be supportive as long as we're above those levels, and the charm will continue to grow on those and be supportive throughout the day. Conversely, also the charm on these out of the money calls will continue to grow throughout the day also, and if we cannot move above these levels, 61.65, 61.70, we'll check pre-market price here in a little bit. then these may become a headwind with price staying range bound between these levels. You'll notice our drunken sailor range is very tight today, 6105 to 6140. So above that, we're bullish. Obviously, a pullback to the top of that would be an opportunity to get involved on the long side for a move back up towards 6170, 75, and then ultimately above that would be 6200. Within the overall drunken sailor range, you see these low exposure areas via the net OI will be at the mercy of the intraday volume action and analysis. So that's why our volume tool becomes vitally important to understand where market participants are transacting the massive volume of the SPX options contracts and whether those options contracts are being transacted higher or being transacted lower, or whether there's a overall just range bound of the calls versus puts. And if that is happening, which we've indicated a few times via our vol-m command, then we'll be range bound, and we have the opportunity to put on some options structures that take advantage of that range bound condition towards the end of the day. So again, above transition is bullish, below transition still slightly bullish, but when the overall drunken sailor range, so it could be a choppiness type action, and then a pullback to 6100 would not be out of the realm of possibilities. Obviously, at the bottom of DS, that'd be a great area to get long. And then below 6100, obviously, we might be a little bit more cautious for a little bit more risk off, depending on what the MTM looks like in an intraday volume analysis. But so just a significant amount of call domination above and below spot price. So really not expecting any major pullback or sort of collapse in the overall structure and sentiment, again, unless we see some news event or some other change in the overall positioning. Moving on to our net stack command, this just indicates the highest sensitivity areas for today. Obviously, just a large, massive amount of in-the-money calls. That largest strike obviously is 5,900, but 6,100 is the next strike that is pretty important for a pullback. And then we see 6165, which I already discussed on the 0DT to the upside. And then we see the charm levels at 6100 and 6200, fairly balanced on those. So that's why we were talking about possibly being range bound within the overall drunken sailor range, as spot price would continue to chop between these levels and the charm would grow on both sides. And then the gamma 6170, that's the highest sensitivity level. That's why I discussed if we get through 6570, we could see 6200 pretty quickly. If you review yesterday's analysis, pre-market, we were looking at 6140, 6150 area, and that's pretty much right where we stalled. We had a quick dealer adjustment move right through 6140. We were talking about that gamma being important, but then we just, there was not met with out of the money call speculation via our vol-m command, which we posted pretty much all day yesterday, had that flat vol-m slope positive, but was flat. So the out of the money call speculation was waning. So the chance of us closing up around that 6150 level was pretty low. And we were pegging that 6140 to the upside would most likely be an area that we would look for at least stalling and most likely close around that area, which we did. So make sure you review those previous pre-market preps for the week and how we use our analysis to get an overall idea of where a price may be going and where it may be stalling, and then where we have an opportunity to have an edge to positions, options, overall structure, as well as contracts and directionality. So we'll move on to the trading view chart for this morning. As you can see, again, from the pre-market, we're already pulling back as we're looking that 6160, 6170 to the upside area. We're already discussing that. And then we're pulling back down towards the 6150 level. Top of the drunken sailor range will roughly be around 6140. Again, we'd watch for that for an opportunity to get involved on the long side. And then if we drop in the overall drunken sailor range, let's go back and review that really quickly. Then we'll be at the mercy of the intraday vol-m command and intraday volume analysis. So again, this may be a choppy area. And even a pullback to 6100 is not out of the realm of possibilities, as market participants want to get paid for their capital being at risk for the week. And we've had a significant move to the upside. The other thing I draw your attention to is where we're at within the overall levels of SPY and QQQ. You see plus GEX and COI up here. Obviously, this is the highest amount of call open interest. And again, when we start reaching these levels, our P-Trans to peak X portfolio is mechanical. And if we close above these levels on that portfolio, then we close our position. So again, reaching those levels means that price is appreciating pretty rapidly. And these are areas historically where we could see some stalling and profit taking. So again, Pre-market, we did not really get close to that level, but within the overall area of sponge that we like to call it. So again, we'll watch these areas for profit taking and stalling to the upside if the structure doesn't continue to advance via the intraday volume commands. So with that, if anybody has any questions, I'll hang around for a few minutes. Everybody, glad it's Friday. Make it a great Friday trading. So yeah, so can you please explain what a dealer adjustment move is? I'm a little new to all these terms. Sure, yeah. So let's go ahead and we'll look at the SPX from yesterday. Okay, so what we call our dealer adjustment moves is these are higher sensitivity areas, most likely met with a lot of gamma. As you know, those are in the money. It's highest in the money. So when we start crossing these levels, these are areas where dealers have to adjust via hedging. And then so if those are long options contracts, our book is long that delta, the dealer is short that delta. And then once you cross those levels, we start capturing a significant amount of either in the money delta as you're crossing those levels, as those options contracts become in the money, or if market speculators are opening contracts above these levels, all of that has to be hedged. So coming into a day like pre-market right now, everything that was transacted yesterday for today is already hedged coming into today. So what has to be hedged is new options contracts being open or closed today, right? So that's where the intraday volume analysis becomes extremely important because if we have a significant amount of out of the money call speculation coming into the complex, that's positive delta on our side, negative delta on the dealer or market maker side, so that has to be hedged. And then when we move through those key sensitivity levels where the gamma is the highest, that's why we look at the web app, and that's why I posted net stat command. We can see what we call a dealer adjustment bar. So obviously that's just an area where the dealer has to hedge, and that has to hedge that gamma as we start moving through those sensitivity levels, right? And we'll start to see those. And that's why, again, we lay out those levels. Those are extremely important. And those are areas that you can take advantage of. And you'll see that many times. You'll see price consolidate right up to those highest sensitivity gamma levels, and then you'll see it pop right through, and you'll see a large expansion bar, right? So when you see that large expansion bar, we call those dealer adjustment bars, but usually those are at those highest sensitivity levels. And so if we know where those levels are, then we know that those adjustments most likely will occur as you move through those levels. And then we can take advantage of that from an options trading standpoint or an intraday trading standpoint. So hopefully that helps. Again, sign up for our education course too, our Gamma Edge framework. That's our flagship options course. We discuss all of that stuff in there for free. So sign up for that and you can review all those lessons. So VWAP that you can use where I can find it. The VWAP is built into TradingView, TOS, Thinkorswim. It's built into most of your brokerage platforms also. So you should just be able to indicators here, and then you just search for VWAP. You should be able to search for VWAP here, and it should be built in. And then these are just standard D bands. You can just add those to any VWAP. Yeah, or a lot of people use anchored VWAP. A lot of people use previous day VWAP. Brian Shannon has an extensive course on VWAP. If you search him on Google, really good information on VWAP. He was kind of one of the first ones, I think, to bring anchored VWAP to kind of the mainstream. So anchored VWAP on a previous event or previous day or a previous low. Yeah, so you can check that out. I just overlay VWAP just for a sentiment standpoint. Obviously, it's volume weighted average price, so it's just the average price where market participants are transacting their overall through the day via volume. So if we're above it, I'm bullish. If we're below it, I'm bearish. I mean, not necessarily in the sense that I'm looking to short, but it just gives me a visual of where market participants are at. So if market participants went long and price is below VWAP, then I don't know necessarily that they're underwater on their positions, but it just gives me an idea of sentiment, basically. So yeah, anchor VWAP works really well. I know a lot of. I mean, I've I've used it before, but for me, it just intraday VWAP just works just as good what we're doing for our directional trading and zero DT trading, and it just starts at the day. And I do have extended hours on because I want to see pre-market high and pre-market lows, and previous day high and previous day low. And many times those areas will match our key gamma delta levels. So that just gives me a greater confluence that those are important from an option standpoint, and also an important from a trader's perspective, which would be a TA standpoint. And um, I love when our TA analysis overlays with our gamma delta levels also, or my TA analysis, because most people that started trading started as a TA trader, right? Or use some sort of idea of open auction, or supply and demand. And I prefer supply and demand. I don't necessarily like support and resistance because I think that gives you a bias. But supply and demand, and the supply and demand also works in the options complex and structure too. So yeah. Confirmation for a level break. So it's not going to be a 1 minute or 2 minute like candle. You know what I'm saying? Now, if you're a scalper and you're looking to do that, then yeah, I mean you can scalp on a break, but I use areas. I don't these levels are not absolutes. Like, we know that there's price discovery around these areas. It's going to oscillate back and forth around these areas because people are transacting options contracts, right? Opening, closing, scalping, whatever. So for a level to hold, I want price to move through it, and then I'd rather have a retest of that area or some sort of consolidation. Mark Minervini, love him or hate him, whatever you want to use, is VCP, right? And it's just volatility contraction. And I like to see price compress, because from price compression comes expansion, right? And you'll see that many times intraday, where we'll come up to a level. I don't know if there was any SPY levels yesterday, but we'll come up to a level, and I personally, so yesterday, yeah, here was a check back that was perfect from yesterday. Move through VWAP, and you can call this a bull flag if you want. Let me expand this for you here. But price moved through VWAP, pulled back, consolidated. So this is your price compression, flagged, whatever you want to call it. And then we started moving through that level. And I would call this an expansion bar, right? Because this engulfed this whole previous consolidation area and flag. And then you get a breakout of the flag, right? And that was close right at zero gex, right? So the zero gex is, theoretical balance point between calls and puts. So above, I give a little bit more advantage to the bulls. But I want to see that met with out of the money call speculation via our vol-am command. I want to see that met with the market trend model moving to the upside. And then you see this compression right at the high of the day, right? 3 or 4 candles. And then you get to this expansion. This is obviously buyers taking control in an overall, consolidation or volatility contraction, and then moving to the upside. And then you see this dealer adjustment bar through P-Trans, right? I mean, if you wanted to know a dealer adjustment bar, this is it right here, right? This is massive expansion, right? So again, moving through this area, and what's going to happen many times is if you took a long through P-Trans, which is a great trade, you're going to get a consolidation and check back period to P-Trans, right? So you have to be able to sit through this overall pullback and not just, now the problem is if you started opening your trade as this candle is moving up, then this is going to be kind of painful to sit through this pullback, right? So this is why you have to be able to manage your risk effectively and have the position size that you feel comfortable with to be able to sit through these pullbacks. And then check back to P-Trans, whatever, if you have moving average, but then you get the move to the upside, right? Above P-Trans. And this is the trade. Obviously, then as the trade starts going in your direction, depending on if you're a scalper or how long you're going to hold, you most likely be taking profit, and then you're back, down into here. Preferably, this is the entry here. This is the preferable entry, and then you're already going through P-Trans and then moving, back to the upside. So again, that's how I look at it, crossing a level. I don't know if that helps. But yeah, these areas are like sponges too. Like I said, I mean, these are price discovery areas on a pullback. Now, a lot of times these will pull back to the penny to our levels, P-Trans, zero gex. So you can get in at those levels. I would say, so for me, what I do is I like to do progressive exposure, right? So a pullback an area, if I'm starting, and my overall goal is to be in 10 or 20 contracts, I may start with 5 contracts here, and then it starts moving in my direction. So now I'm in a significant amount of profit. So then I can add to my position as the um, overall trade keeps moving in my direction, right? Or you may start with 10 here, and then once it moves in your direction, you may take 5 off, right? You're already in nice profit, lock in profit, and then if it comes all the way back down, you get out of the rest flat and you're positive on the trade. But then you can hold the rest for possible upside and trend. Again, depending on what our intraday vol M command is telling us and our intraday tick is telling us, then you can continue to hold. So hopefully that answers your question about that. Sorry. Yeah, I mean, many times these levels hold to the penny, but they're areas, and we like to give ourselves room around these areas, and room means risk management. You don't want to be absolutes because you'll get knocked out of a trade if you're just putting it right on the area. So also the key is if you're in a call dominated positive gamma environment, it's dampened volatility, right? Compared to if you're in a put dominated negative gamma environment. So call dominated, your expected moves really compress, right? So you won't, if you go back, obviously when we're in a put dominated negative gamma environment, you were seeing these huge moves in price, right? But now we're in the call dominated positive gamma environment, and that's what gets you these just trending, grinding days to the upside. And these are some of the greatest days to trade because you can pick a point, you can get in, and you can just continue to ride the trade up. You know what I'm saying? And just pretty much let it go. Compared to if you're in a negative gamma put dominated environment, you can have these massive moves up and down, right? And we have expansive transition areas, you have expansive DS areas, and it's very difficult again to ride a trade for a significant amount of time. So. All right, thanks everybody for joining us. I know that was a little bit longer. I'd like to answer questions. We may be going live midday. We're trying to structure some stuff to add some of our other Game Edge team in, and we're looking to try to do some live trading on YouTube. So we're working on that to where Taylor, which does the post-market prep, and I will be live on YouTube. So again, make sure you sign up for our notifications, and then you'll be notified when we go live. So thanks for joining us, everybody. Make it a great Friday, and we'll see you later.